Next up here, a stock I want to buy nonstop right now that I'm looking at and I'm like, I've seen their numbers now and I'm just so convinced that this company is just a very, very attractive risk reward buy, right? And it is the newest position for me in the public count. And that is Adobe. Adobe, so now we're up over $10,000 on the stock, right? I got to start buying this stock in every single one of my portfolios. I'll be honest with you guys. Like I need to start. I don't think I have a position yet in the Patreon portfolio. I probably need to start. My problem is I have a lot of positions in the Patreon portfolio, so I'm trying not to add any. But man, I should really add Adobe to the Patreon portfolio if I don't already have a position in there. I got to start adding this position across my private portfolios as well, because this one's just, the risk reward is just so dang attractive on Adobe right now, right? If I show you this chart, this is where Adobe's revenues have been trending, right? This is where their revenues expected to trend over the next, year or two. That's beautiful. Like no hype, just numbers, just money, man, just money. That's all I need. I don't need the hype. I don't need all the blah, blah, blah. I just need the money, man. And Adobe, they make the money, man. Like that's just another level, right? Check this out. This is what is expected to happen to their trailing 12-month earnings per share, right? This is the trend that's been on. This is more recent. And this is where things are expected to trend based upon analyst projections here, right? And I don't really dispute analyst projections. Like Adobe is one of those companies that's very easy to project out roughly the numbers because they don't have like this up and down business model. Up and down business models, man, the numbers are crazy. Like you could get a company to be growing, 45% one year, and 2 years later they're growing 20%. It's like, holy smokes, like what happened here, right? And next year they're growing 30%. Like it's all over the place. Adobe's just consistent because they have the recurring revenue streams, right? They have several different apps. They have the whole ecosystem. They're able to just very predictably grow the company. And it's like a Microsoft type company, right? No hype, just the money. That's what I need, man. Just the money. This is what has happened with the company's operating income. We don't have projections on 1000X for where operating income goes. We only have projections for earnings per share and revenue. But the operating income, in my opinion, is going to be growing like up here, like boop, 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 boop. No hype, just the money in regards to this one. Look at Adobe versus like a Palantir versus Snowflake, things like that, right? I mean, gosh. You look at even like a 2-year forward P. I mean, we could look at the forward P. Palantir's at a 261. Adobe's at 20. Snowflake's at negative 120, I guess. Look at a 2-year forward P. 200 plus on Palantir. Adobe's at 17. Snowflake's at 162, right? It's just beautiful. Now, obviously, Palantir, which is a company I love, obviously is going to grow much faster than Adobe, right? So they deserve a premium multiple versus an Adobe. Is it a 10X plus? I don't know about that. That's where I'll push back against that. Is it like 2X, 3X multiple? Yes, that's fair. Is it a 4X, 5X? Maybe that's even fair. A 10X plus, that's where I'll start to push back a little bit, right? Snowflake, does Snowflake deserve to be at a premium of Adobe? Maybe a little bit, but this much? I don't know. I don't know about that because Snowflake doesn't even really have the insane growth rates that at least Palantir has right now, right? So, this is just such an easy money risk reward buy for me in regards to this one that I'm like, I got to just buy this across my portfolios, right? Now, I sent a very important message to my private stock group members, an hour or two ago. I said, market is starting to get more and more hype story driven, which is exact opposite of what Adobe stock is, right? I said, more hot IPOs coming out. Stocks that have been hot or continue to run. I said, this might continue for the next 1 to 3 months. The best thing you can do is stay running your numbers and projections. If you have 1000X, stay running your advanced and intermediate projections. If you don't have 1000X, and build your own Excel spreadsheets or something like that. I said, think like a wolf during times like this. There'll be plenty of sheep out there, up until the next downturn, which who knows when the next major market downturn is. Maybe it's next month, maybe it's in the fall time, maybe it's at some point in 2026. But the moral of the story is here, don't get caught up in all the hype and craziness that's going on out there right now. Run your projections, run your numbers, make sure you're buying companies at attractive valuations that you feel comfortable that you're going to make really good money in over the next 3 to 5 years. Keep this game simple. Don't FOMO into stocks. I know there's a lot of IPOs coming out right now. I know a lot of the hot stocks have stayed hot. Don't fall into all that trap. Focus on great companies that you look at and you're like, this is a very fair valuation. Company grows very nicely. They can grow in bad times, good times, economic times. Boom. Make those type of investments. Stay disciplined and don't get into all the other stuff. And you'll work wonders in regards to where your portfolio goes over time, right? And, the people that chase different things at any price, they're going to end up paying for it. A very heavy price. Price is going to be very heavy. They're going to have to pay. You don't want to put yourself in that position, okay?
How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area.
Already, Adobe, this stock down about 5% here today. By the way, a lot of stocks were down, to be fair, here today. I mean, only 3 stocks I had that were green today are Celsius, AMD, and Estee Lauder EL, okay? But in regards to Adobe, what's going on here? Well, a lot of news came out in the last 24 hours. One, Wall Street. So, Citigroup came out, they adjusted their Adobe price target to $450 from $465. That came out in the last 24 hours. Then we had Citigroup, they adjusted from $450 to $465 here, right? Yeah, big deal. Like, analysts adjusting price targets, like, no big deal, right? This one, Adobe is maintained at neutral by Baird. This one, they raise their price target to $425 from $410. Big whoopee, right? But analysts are always making those moves. I thought the big news that happened today, and this is actually great news, is Adobe launched a standalone Firefly mobile app for iOS and Android. I thought this is a huge development. I think this is great news. This Firefly app has tremendous opportunity over the coming years. And so this was a big step in the right direction, launching for iOS and Android. And so, yeah, this is ability to, basically type in, I want a video to do. I want an image to be blah, 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 right? And it'll basically send you that out, which is going to be very, very helpful to folks that are in any sort of marketing realm. Also very helpful to creators, right? In the creator economy. So huge, ramifications on what this means for Adobe's business model over the long term here, right? So what I look at is a day like today, it's a buy the dip opportunity, right? We have Adobe here, great SaaS related company, trading at a forward P of 20 with a 2-year forward P under 17 on this one, with strong revenue growth. I mean, at the end of the day, guys, like, this is just an easy money buy. It's an easy money buy, and I think it's going to remain an easy money buy for a while, to be honest, because it's an easy money buy even with the stock market near all-time highs right now. So let's say hypothetically the market gets hit at some point later this summer, or let's say it gets hit this fall. Like, Adobe's going to, in my opinion, remain a great buy for this entire year. So that's an important thing to understand. So I look at Adobe and I just want to keep buying the stock, especially any shares I can get under 450 and especially under 400. Like, the further it is under 400. But you look at this company, I mean, it's if you were to have like a book written, right, on what a great investment is, I mean, Adobe would come to mind. I mean, look at the revenue trend for this company over time and where it's expected to trend, right? Look at the gross margin consistency here, right? Look at the net margin consistency. Look at the earnings per share and what's expected to happen to the earnings per share over this coming quarters, right? Look at the free cash flow. Look at the operating cash flow. Look at the operating income. I mean, this is what you look at. And by the way, as far as shareholder equity, they've been doing massive share buybacks. So they have been spending some cash on that recently, which is certainly going to massively help out their earnings per share here, right? Skyrocket. This is what you would look at to understand a perfect business model, just to be quite frank. Recurring revenue stream. It's honestly, regardless of what happens in Iran, between Iran and Israel, regardless of what happens with inflation, deflation, regardless of what the Fed does, Adobe's going to put up their numbers quarter in and quarter out. Great business model, great income statement, great balance sheet at this company. It's just a very easy stock tone. And so I will remain a buyer of Adobe. Okay, let's do some market talk, and then we'll get into AMD.
Percent off the April low is NVIDIA. The other Mag 7 stocks aren't quite that big, but they're big. Meta, 37.5% off the April low.
Cheers.
Microsoft 35, Amazon, Alphabet are 27 and 22 respectively. You know, Apple's been lackluster relative to a lot of other names in this.
Hey, question for you guys. Question for you. From the mega caps, which of these stocks is your favorite right now? Nvidia, Meta, Microsoft, Amazon, Google, McDougal, or Apple? Let me know in the comments section. I'm really interested to hear from you guys on which of those is your favorite right now. And I'm sure other people will enjoy reading through that as well. If you want to know my personal favorite right now, if I had to buy a stock today and I didn't have any money invested into any of these stocks, you know what it would be? Meta. Meta. No question. Now, I'm not buying Meta today. Why is that? Well, I already have a lot of money invested in Meta. The public account alone has, $1.1 million invested in a Meta. So, yeah, like that's a significant portion, right? And so, I'm a little more partial to buying Amazon or Google McDougal right now over Meta. But if I didn't have anything invested, Meta's the best buy of everything in my personal opinion.
Group, but even that stock's up 15% from the April low. Are you poised to believe Roth Capital and say there's plenty of support that the bull trend is indeed underway?
Well, I think the bull trend is underway. We're very lucky to remain bullish through all of this. But I would say that there seems to us on a very short-term basis, you're going to be surprised at this, I think there's a lot of bulls out there. And one of the guideposts that we've been looking for is kind of more company guidance going forward, and guidance is falling off a map still. So we're a little bit worried near term on that. Do I think stocks are higher at year end? Yes. Do I think they're significantly higher a year from now? Yeah. But I think even within the Mag 7, I think you have to be even more stock picking. So like we would be adding to Apple here because we think Apple's going to have a big catch up trade. And we've maintained our overweight stance in Microsoft and Amazon. So that's what's helped our portfolios April, May, June to significantly outperform.
Shan, it's time to just lean into this market, and institutional investors and hedge fund managers, and I like what Adam Parker delivers when he shows up because he.
Are we talking about Adam Peter Parker? Listen, man, this is just hold on. I'll go off in a second, but this is just something ridiculous.
He meets with and he has dinners with and these idea dinners and whatnot, and there was a lot of pessimism among the professional crowd. Now, if you look at the fund manager survey and you think about where the narrative has come to, is it time to just be less fearful and cautious and just lean in with stocks 2% from a new high?
Well, I think the pessimism was likely warranted because it felt like the uncertainty that was being created was really outside of the control of any of the portfolio managers of which you speak. I think the other thing that's happening, Scott, is that we have a tax bill that's weaving its way through Congress that has some very specific and explicit and potentially transformational changes in terms of at least tax over the next 4 years or so for businesses. And so if you're looking at, and I would say it's somewhat tangential even to the AI trade, if you look at being able to expense capital expenditure on software over the course of the next 4 years, 100% in the year of your purchase, wow, that actually could create some of this monetization of the AI trade outside of the Mag 7. I think the other thing that's happened is that, we have seen tariffs and we've seen that expected tariff rate continue to come down week over week over week over week. And as that continues, what we're getting is, to Brian's point, we're going to start to get some real guidance in terms of, okay, we think the tariff rate's going to be 12% or 13% or 11%, maybe 10%. But now I can start to price that in. And so I think that this earnings season is going to be very critical in terms of getting the guidance in the hands of investors, and that could allow professional investors who are more discerning around the fundamentals. I think that's why they're getting more optimistic.
Well, the big part of the story is that...
So here's the issue, right? This really bothers me. This question of, is the bull trend underway, right? Here's the deal. The Nasdaq's up almost 90%, almost 90% from fall 2022, right? We've been in a massive multi-year bull market, If you want to look at where we were at, back in that April lows versus where the market's at now, the Nasdaq, right? We're up about, 27% from those lows, almost 28%. What do you call that? We're in a bull market right now, right? At some point, the bull market will be broken and we'll get a 6 to 18 month downtrend, right? Like a real significant downtrend. Now, when is that? Is that this year? Is that next year? Is it the year after? That's the good question. But there's no doubt, like, we've been in a multi-year bull trend since 2022, right? And prior to that, we were in kind of like a, we can call it a little over a year-long bull cycle, because the previous bull cycle was broken in 2020, right? Then from those lows in 2020, we had a nice bull market for about a year and a half. Then we went into the 2022, ending of that really bull run. And then if you go back to prior to that, honestly, we kind of broke the bull run at the end of 2018. Then we had a little bull run after that into Rona, right? And then that bull trend broke. And before 2018, honestly, we had a bull run all the way from 2009 all the way to that fall 2018 when that bull trend was broken, in my opinion. So, like, we're in a massive bull trend. It's eventually going to end, right? It's eventually going to end, and it'll be painful in the short term, and that is what it is. But for buyers, it's going to be a great day when that happens, right? Whether that's a little later on this year, or whether that's next year, or the year after, or the year after. The issue is you wait too long, right? Like a lot of these fund managers are. Now they need the stock market to crash just to get back to where it was. This is why you don't play this game, right? That the fund managers try to play of, like, not buying when stocks are significantly low, right? Because you look, the NASDAQ was at 10,000 at the lows, right? Roughly in 2022. And some fund managers decided to not buy, right? How do I know that? Well, there's data showing that. But additionally, how do you think all those stocks went down 50, 60, 70, 80%? Fund managers kept selling Meta relentlessly, kept selling Nvidia relentlessly, kept selling Netflix relentlessly, Shopify, go through the long list of them, right? All the stocks that they're happy to buy today, they were selling them. If you were not buying in 2022, right, you need the market to crash almost 50% just to get back to 2022 pricing. 50% crash. It's insane. That's insane. Like, ridiculous. And then think about all the money you could have made along this run, and you could have sold stocks and made big, huge profits. And now you're banking on a 50% crash. Crazy, man, crazy. And that's why you got to be very, very careful. And that's why at the end of the day, when you get, let me make this very, very crystal clear for everybody watching us right now. If you want to make a lot of money in this game, listen. When you get those opportunities, where the market has a major correction or a crash, you buy every freaking share. I know it's ugly. I know there's a million things to not be happy about at that particular time. It was like that in 2022. It was like that earlier this year. It was like that in 2018. It was like that in 2020. It was like that. I go through the whole list of years, right? At the end of the day, when you're going through a major correction or crash in the market, you buy every share in sight. You buy every share in sight. But specifically, great companies that have long-term growth trajectories. Those ones will do you much better.
No one truly knows how the Trump tariffs are going to fully play out. Will deportations that we've seen hurt the economy? There's a story today new from the Washington Post that says Trump officials reverse guidance, exempting farms, hotels from immigration raids. ICE agents have been told to continue conducting enforcement operations at ag businesses, despite concerns about negative effects on the food industry. I wonder if we morph our concerns from what was the trade war and tariffs to just messing up a bunch of industries because you have this policy in place and you don't appear to want to waver from it at all.
Right. We're not out of the woods on tariffs at all, but we are getting more certainty. We think that, it looks like Trump wants to get stuff done quicker than expected, but it's probably going to take longer than expected. But in the face of all that, I'm just so amazed that the GDP numbers at 3.8% or 3.8%.
Yeah.
And I know it's directional, and I know we have to average first quarter and second quarter. That's 2.5% GDP growth. And by the way, I don't talk about it enough. I know you guys do, but the weak dollar, that's really good for U.S. multinational companies. So that's going to be another tailwind for earnings. And I just care about earnings.
But there are two sides to the. I feel like, first of all, I feel like you didn't answer my question, so I'm going to come back to you on that because you didn't answer my question. So let me just go to the dollar since you went there. It is the largest underweight right now in 20 years. The dollar's lost 10% of its value since President Trump took office.
Right.
Now, you can go one of two ways on that. You could say, well, that's good for multinationals like you did. Or you could look at it and say, well, there's a direct line of evidence to a lackluster belief in the American exceptionalism trade. You guys are nodding your head like
yeah,
you agree with that.
Wait a second. Let me answer your question on the whole messing up industries. In the face of this happening, we aren't messing up industries.
Well, how do you know that?
Because earnings just grew 12% last quarter.
Well,
in the face of all of that.
Did you get a bunch of farm earnings reports and hotel
Did you see
and
Deere?
restaurant
Did you see
earnings
Caterpillar?
reports?
Did you see Chipotle? Did you see? I mean, there's a lot. There's a lot of companies that have done it the best that they can. Either they are giving very conservative guidance.
Him and her always end up getting into it a lot, I noticed.
Sometimes they're not giving guidance. A lot of my companies did, and I was shocked that they just reiterated. How about the whole financial services industry? Every single bank reiterated guidance. Not one of them lowered, and that is really quite impressive because they're at the forefront of what's going on the tariff side.
Now, the dollar thing is a legit part of the story. Falling dollar may be good for multinationals because it traditionally has been, but if you think it's falling for the wrong reason, then you sit back and you take a look at the whole big picture of where we are.
You know, in our view, it was at first falling for the wrong reason with respect to international investors losing faith in the United States. That's clearly why you had Europe massively outperform. And why industrials, by the way, are the most eclectic sector in the U.S. market, have also been one of the best performing sectors, and obviously there's a big international component of that. However, one could say that the majority of the dollar's weakness is beginning to slow down. I mean, the trend is beginning to change pretty dramatically.
I mean, 10% is a big move.
Well, if you look from where it was, but now we're starting to see solidification. Also in the Global Fund Manager Survey, we had the good fortune of being in France and in England to see our great institutional accounts in April, and a lot of those clients have massively overweight Europe, Scott.
Well, you know what they said, since you went back to the survey? That international stocks are going to be the best performing asset over the next 5 years.
Yeah, they're talking, first of all, they're talking their book, number one. Number two, that they don't have the fundamental attributes to be able to match what's gone on in terms of stock price. They don't have the economic growth. They don't have the stock or earnings growth. And so many of the people that we talk to are actually becoming, dare I say, reluctant buyers of U.S. stocks again, Scott, because they have to
You can't criticize people for talking their book. You talk your book all the time. So does every single person who comes on the network. Otherwise, do you have any belief in your book?
I don't know.
Like, what are you going to come on and contradict your book?
I talk my process and my discipline in terms of
but you talk
publishing.
about why you think your view and the stocks you have are going to work.
When you're talking,
is that talking your book?
When you're talking to an institutional client that has been, for all intents and purposes, a reluctant buyer of U.S. stocks for 20 years, and they finally were right on Europe for the first time in 15 years, Scott, of course they're taking a victory lap. So yeah, they're going to continue to be on with that because they do have an overall hatred for the United States and yeah, I would call that talking their book and being emotional about it.
Mean reversion in the dollar. Scott, everybody came into this year saying the dollar was overvalued. Nobody said that. Was even before the inauguration. It was before the tariffs. It's before this tax bill and the deficit. So, to talk about the fact that all of a sudden just what's happened politically in the last 3 months is why people are rotating away from the dollar. I think that's somewhat short-sighted. But the point is that this crisis in terms of fiscal sustainability has been building for some time. Now, to Brian's point, people latched on to the German fiscal stimulus as rationale to get excited about Europe.
Yep.
And there's likely some legs to that. There's a tail to that. There's a transmission to the rest of the continent. But I think, in terms of, it's not a binary decision to move out of the dollar just because of what's happening in politics.
The ECB
there's other alternatives.
So, in regards to the whole immigration situation and how that affects companies, right? Here's the deal. For most of big companies, it's irrelevant to them, right? Like Meta doesn't have a massive amount of illegal folks hired at Meta, right? and you go down the whole list of those big companies because they do massive background checks before you even get hired and all those sorts of things, right? You have to show all this paperwork. It's more small business, local businesses, things like that can get hit worse, right? More mom and pop type businesses, right? It's a local car wash that could get hit, right? It's a cleaning company, like stuff like that, small restaurants. Anything like that, farms, like you mentioned, right? You're not going to really see those show up in corporate earnings, so it's not really affecting the big dog companies. But it will affect smaller local businesses, right? Which then could end up affecting bigger companies. But just keep that in mind in regards to that, right? It's not like the Apple Store has massive amounts of illegals all hired, working at the Apple Store. Now they got to shut down the Apple Store because everybody was illegal working in there. Like, no. It's the smaller businesses that are really hit hard when it comes to that, right?